Look, these morning's figures were definitely better than expected. So the IFO expectations component, that rose, but we were all forecasting that. In terms of the actual current condition component, that surprised to the upside. That said, it's still very weak versus its pre-pandemic average and versus a long-time history. And as you mentioned, yesterday's PMIs, they contract, even though it's ticked up slightly, it's still in contraction. In terms of Germany, I think the outlook is pretty bleak. We've been forecasting a 3/4 long recession for quite some time now. Even yesterday, actually, the Bundesbank themselves said, hey, look, we think Germany also will go into recession. They're forecasting now a 2-quarter technical recession, but time will tell. We think a 3/4 long one makes the most sense at this stage.
So when you think about the Eurozone, what does this mean, this bleak scenario that you just described to me when it comes to Germany? Because we have seen, for instance, the Southern European economy is actually performing quite well in the grand scheme of things. Can that offset these pressures we are seeing in Germany?
Look, to some extent already during H1, the periphery was doing very well and offset to some extent. We are forecasting Spanish growth, the data released next week, to outperform. We're thinking, well, if you think, for example, tourism in Spain, it's booming. August saw the highest number of tourists forever in Spain's history for a single month. That's a shocking number of tourists. It's actually equivalent to 23% of Spain's population. That's an enormous amount. And so we do expect that the euro area growth rate will slow in Q3, but we're not forecasting a recession at the euro area level just yet. Germany is the one who's really in the doldrums. Spain is really keeping the euro area afloat. France, obviously, we're going to have a boost from the Olympics, but even INSEE themselves, so the French National Stats Office, they're forecasting negative growth next quarter in Q4. And in terms of Italy, they're sort of plodding along at the moment.
It's so fascinating because obviously we're also trying to understand what the ECB is going to do next. The commentary that my colleague Karen has gathered throughout the week in DC has shown that central bankers within the ECB are stating very clearly that they are concerned about potentially undershooting their inflation target. How likely is that? And do you think we are actually going to see a 50 basis point cut in December?
That's the question everyone's asking. Look, so in terms of the September inflation print, that spooked the ECB. That surprised them materially to the downside. They were expecting 2 to 2.2%. It came in at 1.7. Lagarde said in October, no one expected this. It took us by surprise. So now the concern is when you see inflation fixings, they're sub 2% until mid-2026. Contrast that with the ECB's own forecast. There's a 70 basis point wedge in Q4 alone. So you think to yourself, if inflation comes in line with what the ECB is expecting, or even analysts actually, so next week we're forecasting 2%, consensus is 1.9%. Fixings are 1.7. If it's 1.9, 2 or above, the ECB is about 2.2 to 2.4. If it's that level, we should see a 25 basis point rate cut in December. That's what we're forecasting. If we get a 1.7, that's again a material downside surprise, not just to the ECB, but also to analysts, and that could obviously increase the likelihood of a 50.
So do you think that the next piece of inflation data will be able to give us a lot of clarity about what to expect in December?
So Lagarde did say they're not data point dependent.
They did say that, yeah.
But obviously, if you think we have the GDP data, the inflation data, plus also the November inflation data and also the November PMIs, if all of those data show deterioration or weaker inflation, much weaker versus analyst and ECB expectations, that'll certainly raise the risks of a 50.